group up here as to both how they raise money and how they're seeing trends as it relates to their own capital raising evolve and change, and new entrants into our marketplace. And maybe, Brandon, I'll start with you. You guys recently very successfully sold a majority stake in the Twitter building in San Francisco. Maybe if you could just talk about a little bit, whether it's that deal or others, how you guys are seeing capital flows evolve in your business. I know we were talking last night about, on the fundraising side, into your funds, how that's evolving, but also what you're seeing in terms of players in our space.
Yeah, I'll say on the inflow side, we raised our last fund about a year and a half ago or so.
Which is your 11th fund?
11th fund. And our investors have been pretty sticky over the past 20, 25 years. We started off with just 5 college endowments, and then through the years we kind of developed into about 50% of our LPs were college endowments, and roughly 40-45% were charitable foundations, and then some high net worths to kind of fill out the rest. What's been interesting this past cycle, our last 2 or 3 funds, we've actually gone from 40% of foundations down. That's gone down to about 67% of our investors, and the gap has been filled by both high net worth individuals and these high net worth club of investors that we found a lot in Europe. And it's just interesting, as not to get into a have and have nots conversation, but how there have been a real proliferation of these high net worth family offices that really didn't exist 10, 15 years ago as much. So that's kind of been an interesting evolution in the past cycle on our investor side. On the sales side, I think people want to draw set conclusions like it's all sovereign wealth funds that are buying big buildings, it's all core funds. We've seen on the sales side it's been everyone. We've sold to U.S. core funds, we've sold to foreign investors, we've sold to high net worth families that are looking to hold things for forever. So I will say that's a little bit all over the place. As for the Twitter building, we repurposed Market Square in San Francisco in mid-market, building that we bought empty in 2010, and signed to lead Twitter is about 95% of the office space.
What did you guys buy it for roughly? How much did you invest, and where did you sell it for? That's a layup question, by the way.
We bought it about 120 a foot. We put 220, 230 a foot into it, and we're still in it for 2%. We brought in 249% interest at $940 a foot. And we structured it that way both to, there were a couple tax reasons, as well as we wanted to tap into this sovereign capital, which is arguably the most aggressive capital in the market today, but they can only, for the most part, they can only do 49% interest for tax purposes, and it's not that easy to find a lot of 49% huge opportunities in the U.S.
So do you guys see anything differently in terms of your fundraising or buying and selling activity in the